Good morning, sir. How may I help you today?
I need information about an account.
Who is that man?
He's speaking with a teller about an account.
Not today.
I want him removed from this area.
Sir, he's only asking about his account.
That's not the point.
Is this really how this bank treats people? I'm absolutely certain.
Sir.
Sir,
Then I suppose we've all learned something today.
Get this homeless man out. The order came from CEO Preston Hale himself, delivered in a carrying voice that cut across the marble lobby of Magnolia Trust Bank on a Tuesday morning when Atlanta was just beginning to stir, and the investor delegation had not yet arrived from their downtown hotel. The man standing at the teller counter wore a faded canvas jacket with a fraying collar, held a crumpled envelope in one weathered hand, and had not raised his voice, stepped out of line, or caused a single moment of disruption since he had walked through the revolving door 12 minutes earlier. A few customers turned to look. One man in a gray suit laughed softly under his breath. Warren Tate did not argue. He did not flinch. He only asked, in a voice so measured it was almost gentle, "Is this really how this bank treats people?" 3 minutes later, Bank President Sterling Quinn walked through those same revolving doors, looked across the lobby, and bowed his head without hesitation. "Chairman," Sterling said quietly, "we've been expecting you. Never judge a man by his worn-out jacket. He might just own the building you're standing in." Magnolia Trust Bank had operated in the heart of Atlanta for 31 years, and in that time it had cultivated an image of measured prestige, not the loud, glass tower arrogance of the national chains, but the quieter authority of an institution that believed it had earned its place in the city's financial life. The flagship branch on Peachtree Street was everything that image required. Vaulted ceilings finished in pale limestone, brass fixtures polished every morning before the doors opened, a lobby that smelled faintly of cedar and new paper, and a staff trained to speak in the kind of measured, unhurried tones that communicated competence without warmth. On that particular Tuesday in early spring, the branch had been in heightened preparation since before sunrise, because CEO Preston Hale had notified Branch Director Meredith Langston that a significant investor delegation, 7 representatives from a regional capital group, considering a partnership deal worth well above 8 figures, would be visiting the flagship in the early afternoon. And he intended for every detail to reflect the bank's positioning as a premium institution. Preston had arrived at 8:30, walked the lobby twice, adjusted a framed photograph on the east wall, and reminded Meredith twice that the space needed to project stability, exclusivity, and confidence before asking her directly whether the tellers had been briefed on client-facing presentation standards. Meredith had assured him they had. She had meant it. She had sent the memo herself at 6:45 that morning, gone over the talking points with her senior staff, and confirmed with the facilities team that both the front entrance and the client meeting rooms were spotless. What Meredith could not have anticipated, and what no memo could have addressed, was the man who walked through the revolving door at 9:52. Dressed in a faded canvas work jacket with a fraying left cuff, dark pants worn thin at the knees, and boots that had clearly seen a long winter. He carried a single sealed envelope, slightly bent at one corner, and he moved with a particular kind of stillness, not the stillness of someone lost or uncertain, but the quieter, more deliberate stillness of a person who had learned long ago to move through the world, without wasting energy on anything unnecessary. He found the teller line, took his place at the back, and waited. He did not look around the lobby with the wide-eyed attention of a tourist, or the nervous energy of someone out of place. He simply stood there, envelope in hand, eyes forward, the way a man stands when he has been waiting in lines his entire life, and has made a kind of peace with it. Fallon Briggs was 20 minutes into her morning shift when the man reached her window. She had been a teller at Magnolia Trust for 14 months, long enough to understand the unspoken hierarchy of the lobby, which customers received immediate eye contact, which ones were allowed to ask follow-up questions without the energy in the exchange cooling noticeably. And she had been trying, since her first week, to treat every person who stood at her window the way she would want her own grandmother treated if she walked into a bank alone. She greeted the man with a direct smile, asked how she could help him today, and watched him place the envelope carefully on the counter. His voice was even, precise, and carried a quiet authority that Fallon noticed without being able to name it. She told him she would look into it and asked for the account reference number if he had it. He gave her a series of digits from memory, without hesitation, and Fallon turned to her screen. Several other tellers had glanced over by then. Brief, assessing looks that communicated, without words, the shared discomfort of the situation. Preston Hale stepped off the elevator, at the far end of the lobby at 10:04, straightened his cuffs, and saw Warren Tate standing at Fallon's window. The expression that crossed his face was not anger. Not yet. It was something closer to the particular distaste of a man who has spent years building an image and suddenly finds it threatened by something he did not arrange for. Preston walked toward Meredith with the particular pace of a man accustomed to having conversations that ended immediately in his favor, and he asked her, in a low voice that nevertheless carried more edge than a whisper, what exactly that gentleman was doing at the teller counter during investor preparation. Meredith explained that the man had arrived as a regular customer, was waiting to discuss an account, and had done nothing to warrant removal. Preston looked at her the way he sometimes looked at quarterly projections that disappointed him, not with heat, but with the cold patience of someone who expected to be understood without elaboration, and said that he was not asking whether the man had broken a rule. He was asking whether Meredith understood the context of the morning, and what the lobby was supposed to represent to the people walking through the front door at 2 in the afternoon. Meredith started to say that she understood, but that the bank's obligation to existing account holders did not pause for investor visits, and Preston cut her off before she reached the end of the sentence, not rudely, but with the practiced efficiency of someone who had been interrupting people for a long time, and had stopped noticing he did it. Fallon had looked up from her screen and was watching the conversation from across the counter when Preston walked back toward her window. He did not address Warren directly at first. He spoke to Fallon in the tone he used with junior staff, which carried a particular combination of instruction and dismissal, and told her to refer this customer to the general inquiry line and to assist the next person in the queue. Fallon said, very carefully, that the gentleman had a pre-existing account and a specific inquiry that fell within standard service procedures, and that she was in the middle of pulling up his information. Preston's jaw shifted slightly. He looked at Warren then, a long, assessing look, the kind designed to communicate that the evaluation had already been completed and the outcome was not favorable, and he said, in a voice loud enough, that the nearest 5 or 6 people in the lobby could not pretend they hadn't heard it, that he wanted the man removed from the premises. Fallon said quietly, "Sir, he hasn't done anything." Preston said he was aware of that and that it was not the relevant issue. Warren's expression had not changed. He held the envelope in both hands now, loosely, and he asked Preston, without raising his voice by a single degree, whether he was certain this was the decision he wanted to make. Preston said, without a pause, that he was absolutely certain. Coulter Briggs, who had been head of branch security for 9 years, and who had dealt with Preston Hale's directives for the last 4 of them, heard the exchange from his position near the entrance, and understood immediately what was being asked of him. He had removed people from the lobby before, people who had been aggressive, erratic, genuinely threatening, and this man was none of those things. But Coulter had also learned, over 9 years, that the cost of hesitating when Preston issued a direct order came down on him in ways that were slow and quiet and persistent, and so he began moving across the lobby with the careful pace of a man doing a thing he is not proud of. He was perhaps 20 feet from Warren Tate when the revolving door at the front of the bank swung open, and Sterling Quinn stepped through it, accompanied by 2 members of the bank's legal staff and a woman Coulter did not recognize. Coulter stopped walking. The lobby did not go quiet all at once. It was more that the sounds in the room lost their urgency and fell away, one by one, the way a crowd sometimes goes still when it understands that something important is about to happen, and that it does not yet know what that something is. Sterling Quinn had been bank president of Magnolia Trust for 11 years, and in that time he had developed the particular composure of a man who had seen enough institutional crises to understand that how you entered a room during one was often as important as what you said once you arrived. He was 64 years old, silver-haired, and dressed in a navy suit he wore, with the ease of someone who had long since stopped thinking about what he had on. He walked through the lobby at a measured pace, exchanged a brief nod with the security desk, and then moved directly toward the teller windows. Not toward the meeting rooms. Not toward Preston Hale, who was standing 15 feet away, with an expression of cautious welcome assembling itself across his face in real time. Sterling walked toward Warren Tate, and when he reached him, he did something that no one in that lobby had been prepared for. He stopped, straightened slightly, and bowed his head in a deliberate, unhurried gesture that was not the casual acknowledgement of a colleague, but the formal recognition of someone who carries significant authority. And he said, "Chairman, we've been expecting you." The lobby did not exactly freeze, but it did something close to it. The ambient movement that fills any public space, the small adjustments, the background conversations, the soft sounds of routine, all of it appeared to pause as if the air itself had taken a breath. Preston Hale's expression had passed through welcome, through confusion, and arrived at something that could not quite find a name for itself. He stood very still. Meredith Langston, who had been watching from near her office door, went pale in the particular way people go pale when they understand that a situation has just reorganized itself around a fact they were not given in advance. Fallon Briggs felt something release in her chest. Not triumph exactly, but the specific relief of a person who has been told, without words, that her instinct was correct. She looked at the man who had stood at her window with his crumpled envelope and his worn jacket and his entirely undisturbed composure, and she understood that he had known all along. He had known and he had come anyway, and he had stood in that line and waited his turn the way he had apparently always done, and he had not told anyone who he was, and he had not needed to. Warren Tate accepted Sterling Quinn's greeting with a brief nod and then looked around the lobby slowly. Not with accusation, but with the unhurried attention of a man who has arrived somewhere and is taking in what he finds. He looked at the teller windows, at the soft lighting above the waiting area, at the couples and solo visitors holding numbered tickets, at the framed photographs of Atlanta's skyline arranged along the east wall, and finally at Preston Hale, who had not moved. Warren's expression remained level. He said, addressing no one in particular but speaking clearly enough to be heard by anyone paying attention. "I arrived earlier than planned. I thought I would spend a few minutes as a regular customer before the formal meeting. I suppose that turned out to be useful." He paused. "The investigation we've been discussing, I think we have enough to proceed." Preston's mouth opened slightly, then closed. Sterling turned to look at him and said, in a voice that had no heat in it but required none, "Mr. Hale, you've just given a removal order for the chairman of this bank's board of directors." Warren Tate's full name appeared on no marketing materials, no press releases, and no published profiles connected to Magnolia Trust Bank, and this was entirely intentional. Tate Legacy Holdings, the investment vehicle he had built over the course of 3 decades, starting from a single commercial property, purchased in southwest Atlanta in the early 1990s, had acquired a controlling stake in Magnolia Trust during the institutional turbulence of the financial crisis years, when the bank had found itself capital depleted and its existing majority shareholders had been quietly looking for an exit. The acquisition had been structured through a series of intermediary entities, reviewed and approved by the appropriate regulatory bodies, and completed without a single press conference or announcement, because Warren had insisted on that condition from the beginning. He was not interested in being profiled. He was not interested in being photographed at ribbon cuttings or featured in quarterly stakeholder letters. He was interested in watching what an institution did when it believed no one powerful was looking. because in his experience, that gap between observed and unobserved behavior was where the true character of any organization actually lived. This discipline had its roots in his own experience of the world. He had grown up in a part of Southwest Atlanta that the financial institutions had not found particularly interesting. A community of working people, small business owners, and elderly residents who kept their savings in places they could reach, and who had learned, through repeated experience, that when you walked into a bank looking like you came from where Warren had come from, the calculation happened fast and usually against you. He had been turned away from a loan officer's window at the age of 27 while attempting to secure a small business loan for what would eventually become the first real estate purchase in the Tate portfolio. The loan officer had been polite. The language had been careful and procedural, and technically inoffensive, but Warren had understood the assessment clearly enough. He had left that building, walked 3 blocks to a bench near a parking structure, and sat there for a while, and then he had gotten up and found a different way. He had spent the following 3 decades finding different ways, and somewhere along that process the ways had grown large enough that he no longer needed anyone's approval to proceed. What he had never lost and had carried forward into every institutional decision he made was the memory of how that lobby had felt. The awareness of your own body in a space designed to serve people who looked like someone else. The specific, quiet diminishment of being assessed before you had spoken a word. He had acquired Magnolia Trust not as an act of revenge. Revenge was a poor organizing principle, in his experience, and tended to narrow rather than expand. But because he believed a bank that served a city like Atlanta had an obligation to serve the whole of it. When he had appointed Preston Hale as CEO 4 years earlier, he had done so on the strength of a strong operational record and a persuasive interview in which Preston had spoken at considerable length about inclusive growth and community investment. Warren had watched the following 4 years with patient attention, and what he had seen had troubled him in increments, each one small enough to rationalize individually, each one more difficult to rationalize in accumulation. The investor visit had provided a natural occasion for a formal review, and Warren had decided to conduct his own preliminary assessment the way he had always found most reliable, by seeing what the institution looked like when no one was performing for him. The investor delegation was in the 3rd-floor conference room when Warren requested that the preliminary conversation take place in the lobby rather than behind closed doors. Preston made a quiet, urgent argument for the private room, the acoustics, the professional setting, the presentation he had prepared, and underneath all of those reasons was the simpler reality that he wanted distance between what had just happened and the people whose money was the center of the afternoon's agenda. Warren listened to all of it and said no. He said the lobby was fine. He said the lobby was, in fact, exactly the right place, because the lobby was where everything of consequence had happened that morning. Sterling had a quiet word with the investor team's lead representative, who came downstairs, took in the situation with the practiced composure of someone accustomed to deals that did not proceed as scheduled, and chose a seat near the waiting area without comment. Warren asked Fallon Briggs to describe what had happened at her window. It was not a request designed to perform humiliation. Warren's voice when he asked it was level and without theatrical weight. But it was a public question, and Fallon was aware of that, and she stood in front of the gathered room with the particular courage of someone who has been raised to believe that telling the truth is its own protection even when it does not feel that way. She described the sequence of events carefully. The customer had arrived, taken his place in the standard teller queue, produced an envelope referencing a long-standing account, and asked to speak with someone about account management. She had been attempting to locate the account when she was instructed to redirect him to the general inquiry line and move on to the next customer. When she had noted that the customer had an active inquiry, she had been told it did not matter. She said all of this without embellishment and without once looking at Preston. Coulter confirmed, when Warren asked him, that he had received a direct verbal instruction to escort the customer from the building, and that, in his professional assessment, the customer had given no justification for removal. He had not been disruptive. He had not violated any posted policy. He had simply stood at the counter. Coulter said these things in the flat, careful voice of a man who has decided that honesty is the only position left available to him, and is committed to it. Preston attempted, twice, to offer context. The first time, Warren listened to the entire statement before responding. The second time, Warren waited until Preston had reached the second sentence, and then asked him simply whether he wished to change any factual element of what Fallon and Coulter had described. Preston said he did not. Warren said that in that case the context was established, and he requested that Sterling bring forward the internal service review documentation the compliance team had prepared in advance of today's meeting. Warren then looked at the investor's representative and said, "You should stay for this part." The documentation Sterling placed on the lobby table represented 18 months of compiled internal data. The compliance team had assembled it at Warren's instruction, following a pattern that had emerged from routine customer feedback analysis, a clustering of negative service reports from a specific demographic profile that could not be explained by random variation. There were 47 formal complaints in the reviewed period. Most had been filed, acknowledged with a form letter, and closed without substantive response. Several described interactions recognizable in their architecture even when the specific details differed. The sense of being evaluated upon entry, the subtle shift in tone when certain questions were asked, the experience of waiting longer than other customers for the same standard service, the particular quality of a brush-off that is designed to be undeniable in retrospect. There was the case of an elderly woman, 73 years old, a retired school teacher, who had banked with Magnolia Trust for 22 years, who had been told, during a visit to the flagship branch 14 months prior, that the minimum balance requirement for her existing savings tier had changed and that her account would need to be restructured. The requirement had not changed. The information she had been given was incorrect. When she tried to follow up, she was redirected 3 times and ultimately stopped trying. Fallon, as it turned out, had filed a note on that case after hearing about it from a colleague. The note had gone to Meredith's desk and had not been escalated. There was also the case of a man who owned a small automotive repair business in East Atlanta, who had come to the branch to discuss a small business loan. He had been given an appointment, kept it, and sat down with a loan officer who had asked him, early in the conversation, whether he had considered that his business model might not be a good fit for institutional lending. The loan application had never been completed. The man had left the meeting and had not come back. He had not complained formally. The way people often do not complain formally, when they have spent enough time in rooms that made clear their objections were not the point. Warren listened to each case with a stillness that was not passivity. He sat at the table with his hands folded on its surface and his expression composed, and the people watching him could see the weight of each account registering without theatrical display. A slight shift in his jaw, a brief deepening of the lines around his eyes, the quality of attention that belongs to a person not hearing abstract data, but a sequence of accumulated wrongs that resonate with something personal and long-standing. When Sterling had finished presenting the summary, Warren let the room hold its quiet for a moment and then said, "The issue today is not the way I was treated this morning. The issue is that I am not the first person this has happened to in this building. I was simply the first one who happened to own it." Preston Hale's apology, when it came, was the kind that a person produces when they are trying to solve a problem rather than acknowledge one. He had assembled the general shape of it in the seconds available to him, and what he produced was polished in its way. Measured, remorseful in its vocabulary, careful to distribute accountability across institutional systems and structural ambiguities that, Preston implied, had allowed certain service patterns to develop without anyone specifically intending them. He said the branch had clearly developed practices that fell below the standards he expected, and he said this with the conviction of a man who believes that identifying a failure in the past tense is equivalent to having addressed it. He said his directive that morning had been made under the pressure of the investor visit and had been poorly considered, and he regretted it. He did not say why he had done it. He did not name the actual calculus. Warren asked him one question. He asked, "What image, exactly, were you protecting when you gave that order?" Preston started to answer, and Warren let him continue for approximately 2 sentences before asking a second. "Would you have given that same order to a different customer in a different jacket?" Preston's damper arrived, after considerable winding, in the vicinity of no, but not actually at the word. Meredith Langston, who had been standing near the wall since the beginning of the conversation, said something that surprised the room, including herself. She said that the service culture at the flagship branch had not developed from a structural failure. She said it had developed from a consistent signal about which customers represented value and which ones represented friction, and that signal had come from the executive level. She said this quietly and did not look at Preston when she said it. A member of the investor delegation wrote something in his notebook. Sterling said, almost gently, that the board's leadership conduct provisions were very specific about the obligations attaching to the CEO role, and that the documentation before them today was sufficient to trigger a formal review process, and that it would be appropriate for that process to begin immediately. Warren asked Preston to accompany him to the conference room, not to lead, not to chair, but to answer questions. The third-floor conference room at Magnolia Trust's flagship branch was a room Preston Hale had designed to communicate authority. He had overseen its renovation personally 2 years earlier. The oval table of reclaimed walnut, the low-profile chairs with discreet leather trim, the city-facing windows that framed Atlanta's skyline in a way that placed the viewer at its center. He had sat at the head of that table many times, and the act of sitting there had been, for him, an uncomplicated pleasure. He was not sitting at the head of the table now. Warren Tate was. Warren had not made a ceremony of it. He had walked in, taken the chair at the head of the table, and settled into it with the same quietness that had characterized everything he had done that day. Preston was given a chair across from him, between 2 board members who had arrived with Sterling's legal team, and the discomfort of that geometry was evident in the way he sat. The way a person sits when the room has rearranged the entire story of the afternoon. Sterling read the relevant provisions aloud. The board's leadership conduct framework, incorporated into every executive contract Magnolia Trust had issued since its revised governance structure 8 years prior, set specific expectations around service equity, customer dignity, and the prohibition of discriminatory directives, whether formal or informal. The framework did not require demonstrated intent. It required outcome, and it required that executives not take actions that a reasonable professional standard would identify as enabling differential treatment on the basis of customer appearance or demographic profile. Fallon Briggs had been asked to submit a written account of the morning's events. Coulter had provided a matching account. Together they formed a clear and consistent picture of what had happened in the lobby. And when Sterling asked whether anyone present wished to contest any element of the factual record, no one did. Warren spoke once during the formal portion. He said that the authority a bank holds over people's financial lives, their capacity to save, to borrow, to build, to absorb an emergency or plan a future, is not trivial authority, and it does not earn its legitimacy through compliance paperwork alone. It earns its legitimacy through the cumulative experience of every person who walks through the door, and if that experience is systematically different depending on what that person looks like, then the institution has failed at its fundamental level, regardless of how its quarterly numbers read. The board voted. The result was unanimous. Preston Hale's position as CEO was suspended immediately, pending a conduct review that would determine the terms of his departure. Fallon Briggs was still at her teller station when the conference room meeting ended. She had been trying to concentrate on the work in front of her and had not been entirely succeeding, because the morning had been the kind of morning that requires some time to settle into a person, and that time had not yet been available. She was aware that she had, within the space of a few hours, told the truth about her CEO in front of a room that included investors, the bank's president, and the chairman of its board of directors, and the fact that telling the truth had been the right thing did not make the awareness of having done it any less present in her body. She was also aware that she had a rent payment due in 9 days, a younger sister whose tuition she was helping to cover, and a job that had just depended, as far as she could tell, on honesty going one way rather than the other. Warren found her at her window. He came alone, no legal staff, no board members, no surrounding apparatus of authority, and he stood across the counter from her, in the same position he had stood in 3 hours earlier, when he was simply a man in a worn jacket, holding an envelope. He thanked her. He said it without ceremony, in the direct way that genuine gratitude tends to come when a person is not performing it for an audience. And Fallon said that she had only done what the job was supposed to require. She had treated someone asking for help the way a person asking for help deserved to be treated. Warren said, "Yes, exactly right. And the fact that you'd need to describe that as anything remarkable is precisely the problem this bank has been carrying." He told her he was establishing a customer service reform working group to restructure how Magnolia Trust engaged with its full customer base, and that he wanted her on it. He said her judgment had been demonstrated under genuine pressure, which was the only reliable evidence of actual judgment, and that the working group needed people who had that, rather than people who could describe it in a performance review. Meredith Langston was placed on temporary administrative reassignment and enrolled in a leadership development program. Not as punishment, Warren made clear, but as an acknowledgement that the institutional environment she had operated in had bent her choices in increments, and that she was capable of better. Coulter Briggs was retained. He had, under real pressure, reported what he saw without softening the account to protect himself, and Warren considered that worth something actual. The reform plan Warren presented to the board in the weeks following Preston's suspension had been, in its broad architecture, already developed before that Tuesday morning. Warren had been building toward it for more than a year, assembling the evidence base, stress-testing the financial models, and consulting with community development specialists and nonprofit lending advisors, whose work he had followed closely. What the morning had done was remove the last obstacle, which had always been institutional inertia, the deep tendency of existing systems to continue operating as they are, unless disrupted by something significant enough to justify the friction of changing them. The plan had 5 components. First, a dedicated service tier for customers whose income profile fell below the bank's traditional product thresholds. Not a charity program, but a full service offering with trained staff, appropriate products, and performance metrics tied to customer outcomes rather than transaction volume. Second, the elimination of any informal evaluation criteria linking service quality to customer appearance, backed by training, monitoring, and a direct reporting channel for violations. Third, a small business lending initiative specifically designed for community-based enterprises, with terms calibrated to the actual risk profiles of small businesses, rather than standardized models that had historically excluded the majority of local entrepreneurs who approached Magnolia Trust with viable plans and genuine need. Fourth, an independent complaint resolution channel, independent from branch management and from executive oversight, so that the pattern of filed concerns being quietly absorbed and closed without response could not repeat itself. Fifth, a comprehensive training program for all customer-facing staff, focused not on scripted hospitality, but on the more fundamental matter of what it means to serve someone with consistency, regardless of your private calculation about their net worth. The investor delegation, to the surprise of nearly everyone on the former management team, did not withdraw. Their lead representative, after 2 additional conversations with Warren and a review of the financial modeling behind the reform plan, indicated that the equity and community trust narrative was more compelling to their portfolio thesis than the premium exclusivity positioning had been. Sterling quietly noted that this had been Warren's assessment as well, and that the financial case for inclusive banking, done properly, was not a charitable argument but a correct one with data to support it. Atlanta had a large, economically active population that had been consistently underserved by institutions competing only for customers who required the least from them. There was stable, long-term value in being the institution that served everyone. Preston had never believed that. He had believed, with the sincere conviction of someone who had never seriously examined the premise, that prestige was built through exclusion. He was wrong about that, and he carried that understanding with him when he walked out of the building that afternoon, and it did not appear to sit easily. 6 months after the events of that Tuesday, Magnolia Trust's flagship branch on Peachtree Street looked the same in its physical dimensions, but operated in a way that was noticeably different to anyone who had spent time in it before the change. The lobby had the same pale limestone walls and the same brass fixtures polished each morning. But the ambient quality of the space had shifted in the way that spaces shift when the people inside them are operating under different expectations and actually believe in them. Customer wait times had decreased across all service categories. Formal complaints had dropped by more than 60% from the previous year's average. The Small Business Lending Initiative had processed its first 37 applications, approving 22, and the early repayment data from those accounts was performing above the model's projections, a fact that had prompted a lengthy and not entirely comfortable conversation among the senior strategy team about what that implied regarding where value had been sitting, unacknowledged, for the previous decade. Fallon Briggs had been formally promoted to Director of Customer Experience, a role that gave her oversight of service standards across all 3 Atlanta branches, and a seat at the table when Magnolia Trust was developing policy that touched customer interaction. She accepted the role without false modesty and without excessive qualification. She understood what the work required. She wanted to do it, and she said so plainly. Meredith Langston had returned from her reassignment changed in the specific, quiet way people change when accurate feedback has been delivered in a context that made ignoring it impossible. She was managing a smaller branch now, by her own choice rather than by demotion, and the reports from that location were consistently strong. Coulter Briggs had stayed on and received no ceremony for it, which was, in Warren's view, as it should be. Preston Hale had not found another executive role in the financial sector. The conduct review had concluded with findings described, in formal institutional language, as demonstrating a pattern of leadership behavior inconsistent with the ethical standards required of senior officers, and those findings had been shared with the relevant oversight bodies as required. A new teller at the Peachtree branch, 3 weeks into the job and still carrying the unexamined assumptions everyone brings from the world outside into their first workplace, had looked up from her station. When Warren approached one morning, processed his appearance against the unspoken catalog she had not yet had reason to question, and had begun to shift her attention toward diversion. Fallon, standing nearby, touched her shoulder and said quietly, "Here, everyone gets greeted before they're asked what they have." On a Wednesday morning in late fall, Warren Tate stood in front of the glass doors of the Magnolia Trust flagship branch before they opened and looked at the city reflected in them. The pale early light on the street, the few cars moving through the intersection, the figure of a man in a worn canvas jacket standing in the glass as if he had never left, or had always just arrived, which was in a way both true. He had been in Atlanta his whole life. He had spent most of it building things in the city, from the first property purchase at 27, the one that came after the loan officer who had assessed him and found him wanting, to the portfolio that now included equity stakes in 7 financial institutions across 4 states. He was not thinking about any of that in particular. He was thinking about a bench near a parking structure in southwest Atlanta, where a younger version of himself had sat for a while, after being turned away, and about the particular weight of that moment. Not despair exactly, but something adjacent to it. The feeling of understanding that the systems designed to enable people are often calibrated to enable only certain people, and that if you happen not to be among them, you are expected to accept that as a given and arrange your expectations accordingly. He had not accepted it. He had arranged other things instead, and now he was standing in front of a building he had arranged, trying to make it into something that would not produce that feeling in the people who walked through its doors. Fallon came to find him before the branch opened and handed him an envelope, carefully folded at the center, not crumpled. and told him it was from the owner of the automotive repair shop in East Atlanta, whose small business loan application had been among the first 22 approved by the new lending initiative. The man had written the letter by hand. Warren opened it and read it, standing there at the door in the early morning light. And the letter said what letters from people who have been helped after a long time of not being helped tend to say: gratitude, disbelief, intention, the specific texture of hope that has finally been given a practical form to attach itself to. 2. Warren folded the letter back along its original crease and placed it in his jacket pocket. Sterling Quinn, who had arrived behind him, asked whether Warren intended to say a few words to the press. There was a reporter from the city paper's business section who had been requesting a statement about the reform initiative for some time. Warren said no. Sterling, with the mild persistence of a man who has worked alongside a private person for 11 years and made some peace with it, noted that the story was a good one and that the bank's new direction could benefit from visibility. Warren looked at the glass doors and then at Sterling and said, "If this bank is doing its job correctly, people will know it because of how it treated them, not because of anything I said." He pulled the door open and went inside. The lobby was clean and quiet, and the tellers were at their stations, and the first customers of the day were beginning to arrive, and every one of them was greeted before they were asked a single question about who they were or what they had. The man who had been called a homeless man in that lobby, who had stood at a teller window with a crumpled envelope and been ordered out of his own building, was the reason all of that was true. He had not come looking for recognition. He had come looking at the truth, and the truth had turned out to be exactly what he came to find.